Hi there, I'm Tim Draper, and I'm happy to be here at Global Venture Investing. I think this topic is really near and dear to all our hearts, particularly today. That decentralized finance is reshaping the nature of venture capital and entrepreneurship. This is one of those extraordinary times in history where humanity is taking a anthropological lift. We are all going from old technology, old currency to new currency. We're moving from tribalism to globalism. And this is one of the most exciting times in the history of my world, and I've been in the venture business now more than 30 years. So the way I look at it is this. When the internet came, it transformed communications, information, gaming, entertainment, all sorts of great industries. Before that, when software came, it transformed word processing and spreadsheets. Now we have technology that is going to absolutely transform the biggest industries in the world. With Bitcoin, the blockchain, smart contracts, artificial intelligence, and surveillance, we have the ability, with entrepreneurs doing their magic, to transform not just banking or finance, but insurance and healthcare and government and venture capital. All finance is going to go through a major transformation. So this is quite an extraordinary time. And let me tell you how I am thinking about it. First, Bitcoin created a currency that was open, transparent, global, frictionless, decentralized. What that means is it's not tied to any government entity. It's not tied to a political force that decides to print money willy-nilly and then we all have to suffer the inflation consequences. It opens up the field. It makes it so that one Bitcoin is worth one Bitcoin. People have asked me, well, isn't Bitcoin really volatile? And I say, no, one Bitcoin's still worth one Bitcoin. But over time, all these other currencies are very volatile against Bitcoin as they slowly disappear from our world. I see Bitcoin as the future of money, the future of how we will operate. And I have people ask me, "Are you going to sell your Bitcoin?" And I say, "Into what? Why would I sell a fantastic, decentralized, frictionless, non-inflation currency into one that's tied to government forces and who will just weaken my value?" Here's the other thing that's really interesting about Bitcoin is this: it really levels the playing field, because if there's a software engineer in Argentina today, that software engineer doesn't have a lot of incentive to create anything of great value if all they're going to do is be paid in Argentinian pesos, because the peso drops 50% or more every year in value. So why would you build something of great value where you knew you were just going to watch it disappear over time? But if that software engineer is working for Bitcoin, they know the value of a Bitcoin. They know there are only 21 million of them. They know that Bitcoin will be accepted everywhere. I'm not going to take Argentinian pesos in America. I'm not going to take Nigerian naira in America. I'm not going to take, and there are a lot of countries that won't take the American dollar, particularly now after they've printed 13 trillion of them and created an inflationary scenario. So Bitcoin is a really extraordinary opportunity to make it so that people around the world feel good about creating value wherever they are, and that levels the playing field. So that creates sort of another way of thinking about the currency. I mean, the obvious things are it's a great store of value. It's a great way to pay people overseas, move money across borders. It's a great way to, and for retailers, it's great for them because they can save 2.5% to 4% that they pay to the banks today. And so that creates this new, there's this new thing that's sort of more of a leveling of the global playing field for the world. So this is very exciting. So that's Bitcoin. It also, if you get Bitcoin and you're holding on to like a ledger and you've got Bitcoin in it, it makes you feel like, well, wait, why am I paying those bank people to hold my money when I've got it right here? And I can just send you money from here to your phone from anywhere to anywhere in the world. And if I wanted to do that today with dollars or something, I'd have to figure out foreign exchange. I'd have to work with my bank. We'd have to set up a wire. We'd have to go a whole bunch of things. Here, I just go, oh, how much is it? Click in and then zip it over to you. So this is a better currency. So, and it's the currency of the future. So I think it's the one that you'll be able to spend in the future. I think people at Starbucks are going to laugh at you if they come to you and they say 4 or 5 years from now they're going to say, if you're trying to count out dollars and hand them over for a coffee, they'll laugh at you. They'll sort of say, wait, don't you have any Bitcoin? So that's the currency, and that transformed banking and a number of other things. The other thing is there's the blockchain. The blockchain creates this perfect ledger that balances, that keeps track of every single transaction that happens in Bitcoin, but it also keeps track of data. It does many different things to keep permanent records. Well, that's incredibly valuable too, because if I know that it keeps perfect records, then as a venture capitalist, I'm thinking, well, wait a second. That means if I raise a fund all in Bitcoin and invest it all in Bitcoin into all the various portfolio companies, and they pay their employees and their suppliers all in Bitcoin, then we can keep perfect records. We know exactly how everybody is spending their money. And if we keep these perfect records, we can do it without the accountant, the transfer agent, the auditor, the bookkeeper, and the government gets their piece too. So the government has a way of figuring out how to tax through that system, and it's all automatic and it's all completely honest. And as we know, the most honest places create the most wealth. Lee Kuan Yew figured that out when he reinvigorated Singapore. Singapore started as one of the poorest countries in the world, and when he came in, he infused honesty and trust into the government and the people of Singapore. Now they're possibly the most trusted people in the world, and I think they're the wealthiest, or if not among the richest country per capita in the world. So trust really matters. So if you can set up a system that has perfect trust on the blockchain, then that system can create incredible value over time. Okay, so then let's move to smart contracts. This technology allows people to set up contracts in software so that we can pay everyone in software without having to do anything. It just happens. So let me give you an example of a great smart contract app or application. Let's when you watch a Star Wars movie, you see 15,000 names go at the end of the movie through the trailer. I mean, through the end of at the end of the movie, all the credits. Well, those 15,000 people each have to get a check every quarter for all and they have to calculate all of the numbers, how much money has been spent on that Star Wars movie and how much has been earned and all that. And then they send out envelopes with checks, handwritten checks in them. And those handwritten checks cost $7 a piece to send out. Well, some of the checks are for $3.22. What if all of that were done completely in Bitcoin, and each of those 10, 15,000 people had a Bitcoin wallet, and the waterfall worked automatically? Then every time someone went to the movies and paid $20 to go into a movie theater, that $20 would be turned into Bitcoin and spread throughout all those Bitcoin wallets. And the artists and the lighting director and whoever else all would know that they were being paid the right amount and it was going into their Bitcoin wallet. In venture capital, the same thing. I don't have to pay for the distribution of a bunch of shares or a bunch of cash if I have funded a company that became a big winner. It would automatically flow into the wallets of all my limited partners. So I'm really looking forward to that because I do know I pay big accounting bills, big auditing bills, big bookkeeping bills, big legal bills in running the venture capital business. And I think all of your businesses do too. And this will simplify all of your businesses. So the other thing that's coming is artificial intelligence. And what this is using data for a lot of different decision making. And that is actually transforming the finance and banking and insurance worlds too. Let me give you an example here. Let's say you want to start an insurance company from scratch today. Well, you wouldn't do what all those big insurance companies do. You wouldn't. What they do is they charge you. You pay your premium and your premium, your premium, your premium, and then you issue a claim. And then in most cases, they fight your claim, and they have a bunch of lawyers fight against you, and then you finally settle that claim, and it takes 6 months, and finally you get a check from them. Well, what if using surveillance, you pay your premiums and then you get a check and then you come home and you realize that your house is burned down? Well, it's in the opposite order of the way it would happen in insurance. The check might come before you even knew that your house had burned down. And the reason is that they can surveil it. They can see it from the sky, or they can, we saw that your car was blown over in a hurricane, and we've sent you the check, and your check has arrived before you've even had to issue a claim. That's the kind of insurance company that you can actually create today. And that's really exciting. And that can be done with Bitcoin on the blockchain with smart contracts, as long as you've tied in this surveillance. And then I take it another level and I say, well, what is government? Well, government is a series of insurance companies. It's your healthcare insurance and your workman's compensation insurance and your unemployment insurance and your pension and your social security insurance. It's all these insurance programs. Well, now why can't those all be done in the cloud competitively, where you get to choose the government insurance program that's right for you? And I think that that's starting to happen. You're starting to see governments compete across border. Estonia set up the first e-governance, where they're actually not just, as the former prime minister said to me, well, we just by doing digital signatures, we saved 2% of our GDP. And then we did digital identity, and it lowered the crime rate and the business climate improved. And then we did digital voting, and all the young people started to vote. And it's a safe, secure vote. Well, then he said, and now I'm going to make you the 4th virtual resident of Estonia. And third, I was the 3rd virtual resident of Estonia. And now he has, where there are 1.4 million Estonians, there are about 200,000 virtual residents of Estonia. And he can start providing these services across border. And so that means that governments can compete across border for you. If you're an entrepreneur or a business person or a money person, those governments want you and they will compete for you. And so the services that they provide could come from anywhere. It could come from, you could get your Social Security from Chile, you get your healthcare from Canada, and you could get your workman's comp insurance from a government that was set up in a satellite miles over your head. So governance is going to go through some major changes, and I think governments are going to have to work hard to think of their customers rather than thinking that they control all of the people around them or their constituents. They're going to have to think about their customers. So that's a major change that could potentially happen over the next 5 to 10 years with these new technologies. The decentralized world is what I'm describing. The world now has the potential to be completely open. It's really interesting how powerful freedom is and how openness is so much more valuable than closed. All you have to do is look at North Korea and South Korea. North Korea is the socialist dictatorship, totally closed off to all the rest of the world. And South Korea is completely open, transparent, capitalistic system, very strong. And the average South Korean makes 400 times the income of the average North Korean, even when combined with purchasing power. And the average South Korean is now 4 inches taller than the average North Korean. So freedom and openness is really powerful. And the decentralized world is allowing us to globally open up. And we open up around the world, across borders. I think the concept of customs, duties, non-tariff barriers, tariffs, all of those things are going to slowly go away as the world becomes completely open and global, and we're all going to be so much better off with less friction, less combativeness, less concern about whether we trust that government or that government. We will work with a very trusting system, and that trusting system is going to be built around Bitcoin, the blockchain, smart contracts, artificial intelligence, and surveillance. And so I want to thank you all for listening. I think it's been wonderful to be here. And I think the Oxford debate will rage on. Thank you for having me.
Ladies and gentlemen, Tim James, thank you for having me today. It is an honor to be with you. I think we must feel lucky to be born during such an extraordinary time. There is tremendous amount of technological advancement in many fields, and well, A decade ago, we've discovered the blockchain through the Bitcoin use case. To learn about blockchain, I bought my first Bitcoin at $200 in 2013. Guess what I've done when the price doubled? Today, Bitcoin is between 30 and 40,000 US dollars. At the same time, I can also give you at least 3.5 reasons why Bitcoin is, I dare to say, currently failing as a currency, but exceeding in the field of a novel digital asset class that every investor should watch. But I keep this discussion for another day, because for my part today, we are not here to talk about Bitcoin. We are here to talk about the underlying blockchain technology. We can all Google. The World Economic Forum reports 10% of GDP will be stored on blockchain by 2027. The Bank of International Settlement reports that 80% of central banks have digital currency efforts. My own business, we are running 3 capital markets networks in the US, the UK, and the Middle East. And with our software, we save between 26 to 48% of the cost for a transaction, for transaction settlement in the most efficient public markets. James's question today is not about public markets. Instead, how blockchain will impact private venture capital investments. In this context, I feel I sit on your side of the table, and I would like to present good news and even better news for you. The good news is blockchain will not disrupt the venture investment model. At the worst, the venture community will adopt a new set of tools to handle digital assets. And so the even better news is blockchain will bring an incredible investment opportunity. On the one side, in new forms of digital assets, and on the other, in new industry transforming startups that develop tooling. I guess this is something we don't want to miss out on. To elaborate how we and you can arrive at this conclusion, that there is no disruption but opportunities, first I will frame the term venture investing. Then I will define the term blockchain technology. And at the end, I would like to analyze and put the two in context with another. Let's get started. During my venture activities at State Street, we had the primary purpose to find innovative products that we can integrate into our existing service offering. Each of you has a different rationale on why to venture. And therefore, for today's conversation, I would like to propose to frame the topic and focus on venture investments with pure financial objectives. So funds who can efficiently pool capital from investors, find early stage companies that need capital, and will turn them into unicorns. We all know this model works great. Investors get great diversification and attractive risk-reward profile. Startups get capital. Startups get efficient access to capital and can keep the capital table clean. Venture managers become active and can become active partners to help address risks. And for all of them together, there's typically a well-aligned time horizon. So no need for not helpful daily pricing and other practices that we may know from other financial market segments. So what about the blockchain? In general, the blockchain is pretty much a 10-year-old database concept that is operated not by one entity, but by a group of entities or even the public. At this point, we need to differentiate between two forms of blockchain: the permissionless blockchain and the permissioned blockchain. A permissionless blockchain like Bitcoin or Ethereum can be joined and can be operated by anybody, including ourselves here from our desks. An example for a permissioned blockchain is the free Hyperledger Toolbox from the Linux Foundation or Coda from R3. Only permissioned entities that operate and engage in these networks build on these new technologies. For specifically for financial market activities, I'm a little skeptical on the use of global permissioned and global public and permissionless environments. There's a few reasons. First, we all have borders. I'm joining you from the UK, and we have enjoyed Brexit for the last couple of years. Nations will want to control, and I don't see them surrendering their capital market anytime soon to a global open source community. In addition, permissionless technology does not yet scale well and does not easily comply with regulatory frameworks. We all remember the ICO initial coin offering craziness that we had around about 2017. And at the end, all of this resulted in nothing else than a blockchain-based crowdfunding model. So in short, existing permissionless systems have never been designed with capital markets in mind. On the other hand, I'm very bullish on the permissioned blockchain technology. While AI, robo-advisors, and many other technologies may automate and fully automate pre-trading and trading activities, permission technology is the perfect technology to automate post-trade processes. So to automate any administrative tasks in the back office of the capital market. In fact, to give an example, the largest network that I'm involved in is streamlining cross-border transactions, cross-border settlement transactions between the US and the UK. We reduce transaction fees by 20%. We offer 40 basis points higher and 80% faster cash distributions from issuers to investors. And we make available a wider set of shareholder entitlements across the border. Up to here, we have framed the venture model. We have looked at the blockchain as a novel database concept, and we have established the basis that digital assets are an attractive new asset class. So what does blockchain do to the process of venture investing? Does the blockchain provide new sources of capital, new forms of capital? Does it streamline venture transactions? Or does it improve even liquidity and exit options? In my view, not really. New sources of capital, I don't see it. Pension funds, insurance companies manage most of the world's capital, and they still want to access risk-return profiles of private companies. Small investors, such as individuals, have been excluded from the past, and they can continue the crowdfunding model or angel investments. Tabbing into them is not going to disrupt how the venture investment works today. Streamlining venture transactions. When doing a deal, complexity and cost is in the due diligence efforts and the legals. Once an investment has been agreed, we've already mentioned the post-trade area has the biggest potential where processes can be automated. Again, a benefit for the companies, but no impact on the venture model. Better liquidity and exit options? Not really. Regulators restrict public trading volumes on private companies. And well, specifically in the private market, perhaps companies may want to offer their employee base a more efficient share employee plan and scheme so they can trade amongst themselves. Again, a benefit for startups. So all in all, to arrive at a conclusion, blockchain is a great technology with many benefits, but these do not impact the venture investment model. So blockchain is not a venture disruptor, but it is a venture opportunity.
Hi, everyone. Thank you so much for joining us. So today we have a very exciting debate. We are going to hear two passionate and visionary leaders discuss an important topic of if blockchain and distributed ledger technologies will disrupt venture capitalism moving forward. So truth springs from argument among good friends. So let the debate begin with Tim Draper, the legendary Silicon Valley-based venture capitalist, who will argue for the motion before Thorsten Peisl, Chief Executive Officer of Rise Financial Technologies. Thank you.
Terrific. Thank you, Rachel, and thank you to the Global Corporate Investment Forum group. You guys are great. It's kind of fun to do an Oxford debate. Being American, I've had no training in this, so. But I do want to kind of go through some of the points that Thorsten made and some of the points that I made, and see if I can rationalize them. Clearly, Thorsten and I see through very different lenses. Thorsten comes from Rise Financial, and they are focused on building relationships with lots of different companies and having each of them create their own blockchain, which would be a permissioned blockchain. But Bitcoin and Ethereum are breaking all of that. They're permissionless, and he makes the argument that the governments won't let this happen. I think the governments can't afford not to let this happen. I think he thinks governments will get in the way of the progress of Bitcoin and Ethereum and all of these they call them permissionless, decentralized, open, transparent blockchain. So it's and then the other thing that I think we have that is different is that our time horizon is a little different. I think Thorsten is looking at the world as it is today. I'm looking at the world as it could be moving into the future. And I think we have, we agree on a few things where, yes, the blockchain creates better liquidity and it's frictionless and it's more valuable. But if it's only permission blockchain, then you're missing out on the best parts of it, which are that it's global and it's decentralized, and you can use this one type of currency for the entire world. So how does the blockchain change venture capital? Well, and how does that how does the world look in the next 5, 10, 15 years? Well, I've been in the venture capital business for a long time, so that's my lens. My lens is very where Thorsten may be sort of narrowly focused. I'm very broadly focused, but not very deep. And so the way I look at it is that venture capital what it can be because of the blockchain, because of Bitcoin, because of smart contracts. Venture capital can go through a major change. Now, I agree with Thorsten that the blockchain is opening up all sorts of opportunities for venture capitalists to invest in. And Bitcoin is creating an amazing new platform for the world to benefit from. We're going to have it's just a better currency. It's open, transparent, global, frictionless. That you don't have to pay 2.5% to 4% every time you swipe a credit card. It's clearly moving in the way of this becoming critical for the world's development. And I think the world is going from being tribal to global. It's going from being nationalistic, although there was a little bit of a backlash for a little while there, but I think we're on a continuum of going more global. So so how does that change venture capital? Well, I have this vision of venture capital since I pay huge accounting fees, huge legal fees. There are all sorts of friction items, bookkeepers, auditors, transfer agents, all of that. What if that were all on the blockchain? What if that were all in Bitcoin? I can imagine being able to raise a venture fund all in Bitcoin, invest it all in Bitcoin, have all of my portfolio companies all pay their employees and suppliers in Bitcoin, and then having that create perfect records. So as a result, we would end up with the whole system in place. I'd be able to see what all the portfolio companies are spending their money on. I could maybe identify problems earlier. We could have that all in the system. And then for my limited partners, I can put, whenever we have some sort of distribution, I can put it all into Bitcoin wallets. It can flow. The waterfall can just flow right into people's Bitcoin wallets, and it doesn't have to be, can all be done on a smart contract. It doesn't have to go through the lawyer's hands, the accountant's hands, and the auditor's hands, and the bookkeeper's hands. So we're looking at a very exciting future in venture capital, and I think that the investor and the entrepreneur are going to get closer together. So yes, we are going to go through major changes in venture capital. And the blockchain is going to have a big impact on that. That said, it won't just be venture capital. The entire financial community is now recognizing that that Bitcoin and the blockchain and smart contracts are going to be a major part of the structure of finance in the future. And that means that if you're a pension manager, if you're in any way a fiduciary, and you see your government printing money, you recognize that you're going to see inflation coming, and that means that that your currency will fall, and the value of what you build will fall over time if a government creates a currency that falls to inflation. But with Bitcoin, it counters inflation, because there are only 21 million of them, and no government can print them. They're already out there. They're going to spread throughout the world, and I think we're going to see an anthropological leap because of the value of Bitcoin. And with that, I yield to my good friend Thorsten, and I look forward to his wise counsel.
Well, Tim, thank you. It's an honor to be with you here today, and welcome everybody one more time. Personally, my lens that I have on this subject is from the capital markets, and specifically my background is the back office of the capital markets. So my entire life, or my entire professional life for the last 20 years, I've been moving securities, and I'm moving assets around through custody, CSDs, and all those entities. So from that lens, I'm looking at the global trend, and I recognize the blockchain is a massive global trend, and specifically Bitcoin is a massive trend, because there's an incredible amount of value attached to it. I believe Tim and myself, we both agree also that the blockchain has tremendous potential. I see the blockchain as a database that, as Tim mentioned, out there comes in two forms: permissioned and permissionless. And I'm very, very bullish on the permissioned blockchain technology, because it is compatible with the existing legal frameworks. It's compatible with existing workflows. It demonstrates accountability. It offers selective transparency. It offers the scale that we need for many applications, and so on and so forth. Right. So I'm very bullish about permissioned blockchain, or enterprise blockchain, as they're often called. Tim's main argument, Tim, your argument was mainly based on the success of Bitcoin, right? And here, I believe, our views might part a little bit from another. If I phrase it in a diplomatic way, my view of Bitcoin is a little bit more balanced. So I'm not an extremist that says Bitcoin is going to replace the US dollar. But also, I'm not an extremist that says Bitcoin is going to disappear, right? I'm placing myself in the middle of those two extremes, and I can explain why. And I think some of these reasons would also rebut a little bit some of the arguments, Tim, that you're bringing forward, or you've been bringing forward today. The first argument why I'm a little bit skeptical is, again, we've heard it before, I believe also, we have borders. I'm broadcasting today from the UK, and we have been enjoying, as I mentioned in my statement, we've been enjoying Brexit for the last couple of years, right? We have seen a lot of nationalization with the last administration, the United States, right, and everywhere around the planet. So we have borders, and we will continue to have borders, and borders will shift. And nations, governments, and central banks will want to protect their society, will want to protect their economies, and for that matter, they want to control all aspects of that, and specifically monetary supply over time. So these governments and these nations also are a little bit in competition with another. And all of this, for me, renders a global blockchain, a permissionless blockchain, where there's no control over it whatsoever, and where the monetary experiment hasn't lived through crisis of war times and other bits and pieces. I see this as very critical. So I don't believe in Bitcoin because the underlying technology cannot be put into existing regulatory frameworks and is practically incompatible. The second reason I'm a little bit more skeptical about the monetary experiment that we have here is, in my view, it's highly volatile, right? I bought my first 10 Bitcoins 2013 when one Bitcoin was worth $200 US, right? If I would have held on to those Bitcoins, and if I would not have sold them for speculative reasons, today they would be around about, I don't know, 300, 400,000 US, right? They cost me 2,000, right? If it's treated as a currency, and I would have bought a pizza in 2013, how many pizzas would I have gotten with my Bitcoins, with my 10 Bitcoins, right? A Bitcoin is a Bitcoin. Yes, it's a Bitcoin, but how many pizzas can I buy in 2013? How many pizzas can I buy today? We don't need to look as far as between 2013 and today. We can even look in the more recent history, right? At the moment, I believe the price is around about 30,000. 2 weeks ago, it was around 40,000. In December, it was around about 20,000. So because a currency is always put in context of other value, and very often at the moment to other currencies such as the US dollar, the euro, it is perceived as highly volatile, and the purchasing power of it is changing all the time. So therefore, it is too speculative at the moment, and for this reason, there also the cryptocurrency community has introduced the concept of stable coins, which is, at the end of the day, a cryptocurrency that is backed by a real asset. And stablecoins have further ignited the thought process of, well, the central banks could create digital central bank money, CBDC as it's sometimes referred to. And I absolutely believe this is going to happen. So central banks, whether it's the ECB, the Fed, practically, I think the World Economic Forum has said around about 80%, no, sorry, the BIS, Bank of International Settlement, has said 80% of all central banks on this planet experiment with digital coins, printing their own version of digital coins. So I think this is inevitably going to happen. And these controlled currencies, so to speak, they will have new features that we don't have today. They may be programmable, but they could be integrated into the Internet of Things trend and combined with other technologies. So again, here I'm very bullish about it, but we are a couple of years away from that. China has its first version of the digital currency. The Swiss, I believe, they launched one this year. Lagarde from the ECB has given a 5-year time horizon. It's being discussed all over the planet. So borders is the first problem. Volatility is the second problem with Bitcoin specifically. The third point, I believe we do see a misalignment of interests around Bitcoin. And here what I mean is the users versus the operators of the network. The operators are the miners. They are being incentivized through collecting fees, right? You could say transaction fees for that matter. And why there's a conflict of interest? Because those miners create and they process transactions in batches or in blocks, right, as we call them. And in one block, they can only put a finite number of transactions. Let's say a block is a container that can hold 1,000 transactions. And we know at the moment they print blocks every 10 minutes or something like that, right? So we can process 1,000 transactions every 10 minutes. And if we have 100,000 transactions, then you've got to wait until your transaction is in the queue. In order to jump the queue, you can set the price. You can attach a transaction value. And the average transaction value, when you Google Bitcoin transaction price, I've tried it yesterday. The first entry of Google is a website, and that website is quoting the current price of a Bitcoin transaction is around about $10. Right, that's yesterday's price of an average transaction. So imagine you're going to Starbucks and you buy a latte for $4. And then if you want to pay immediately, and if you don't want to wait for hours and hours and hours that your transaction is being confirmed, then you need to pay $10 transaction fees, which again, from a monetary point of view, from a usage point of view, renders it for me as not ideal, as an ideal structure. Overall, again, there's other reasons as well, but I do have skepticism because of the borders, because of the volatility, because of the transaction fees and other areas. However, I'm optimistic about Bitcoin as a digital asset class. So I think it is going to be out there. It has its place, and it has earned its place. It's absolutely a phenomenal invention. And it's a speculative asset, and maybe it becomes a more stable asset, and sometimes call it a store of value compared with gold and bits and pieces. So I don't want to play down from that angle. So I think it absolutely has its space, and it should deserve an allocation in every portfolio. But as a currency, I believe I follow the lead from Andrew Bailey of Bank of England, for Lagarde, and all the governments around the planet, and their initiative to launch digital currencies. So in conclusion, I'm skeptical about Bitcoin and its revolution as a currency. I believe in Bitcoin as a new form of a digital asset that people can invest in, and the underlying technology. Again, I'm incredibly bullish, and I share this completely with Tim. That technology will transform many industries, including the back office of the capital markets, that then underpins transaction processing from public securities to private securities. But ultimately, the venture model at the end of the day, everybody from you are following, where you identify attractive companies, you perform due diligence on those companies, then you invest in those companies, you help them grow, you help them succeed, you take out the risks, and then at the end of the day, if you're financially motivated, you sell them for a higher share price, and I think that model will not be impacted by the blockchain per se.
I was thinking, Thorsten, that your point of view might be slightly more toward mine if you'd held on to that Bitcoin. But
that's true. I fully agree.
What I really like, you mentioned that governments are in competition with each other, and I agree with you completely. And I'm saying the world goes global, and governance can go cross-border, the way Estonia is doing a virtual residency program, and that becomes an industry, governance as an industry, and people will want to go to the government that is the most advanced, and the most advanced governments are going to be the ones who are attracted by Bitcoin, because they're saying, hey, Bitcoin is the most interesting new technology. In fact, when China shut down Bitcoin, Japan said, we're making Bitcoin a national currency. And there was this brain drain out of China into Japan. Anyway, you hit on something very strong, that competitive governments. But the thing you did mention was how expensive it is to do a transaction in Bitcoin. Well, there are a bunch of these companies like OpenNode and Lightning Network who are allowing those transactions to happen very quickly and very cheaply, so that argument is no longer valid. And as time goes on, you're going to see more and more of these transactions happen. Anyway, great job. That was fun. Any questions from Rachel or anybody else?
Yeah, well, I just wanted to say thank you, Tim and Thorsten. That was a really lively and great debate. I mean, you both made really, really great points. So I'm sure the audience and everyone watching appreciated that. There is a poll that we were conducting during the debate for the audience to cast their votes to see, if they agree with Tim or if they, disagree with Thorsten. So let's see here. The poll results are in, and okay. So 67% of the audience agree with Tim and 43% disagree with Thorsten. So yeah, those are the results.
Thorsten, you put up a good fun. I'm shocked. I was thinking I was going to vote for you.
Yeah, I think your name carries a lot. No, you've done a great job. And at the end of the day, right, the Bitcoin is it has its future. I think overall we're not too far from each other in our beliefs on the technology itself. But again,
it's interesting because you're seeing a trend here, because the only other debate I had, I lost, and it was pretty much the same topic, but it was 4 or 5 years ago. And you're seeing all of a sudden people are starting to go, oh boy, this is really interesting. We're getting into this world where Bitcoin's really valuable. Oh, we went to 50-50. There we go.
Maybe we should carry on a little bit, Tim.
About this.
A great way to end the debate.
I get nervous if that many people agree with me.
Okay, Tim, Thorsten, thank you both so much. It's been a pleasure, and thank you everyone for joining us.
Thank you, Tim.
Thank you. Bye.
Thanks.